Today, we will talk about buy and hold, how the investing strategy works. Buy and hold is a passive investment strategy in which an investor buys stocks or other types of securities and holds them for a long period, regardless of fluctuations in the market. This means that the investor is not concerned with short-term price movements and technical indicators. Many legendary investors, such as Warren Buffett and Jack Bogle, praise the buy-and-hold approach as ideal for individuals seeking healthy long-term returns. Conventional investing wisdom shows that with a long time horizon, equities render a higher return than other asset classes such as bonds. A buy-and-hold strategy has tax benefits because the investor can defer capital gains taxes on long-term investments. Ownership of shares comes with privileges, including voting rights and a stake in corporate profits as the company grows. Shareholders can vote on critical issues and elect directors to the board. Activist investors with substantial holdings wield considerable influence over management, often seeking to gain representation on the board of directors. The debate over passive versus active management styles persists. A buy-and-hold investor reflects a passive management style. In the case of a mutual fund or exchange-traded fund, indexed portfolios mirror that of a common benchmark. Stocks are held for as long as they remain components of the indices. Passive management has shown to outperform active management, on average, over longer time horizons and after fees, and it can typically defer capital gains taxes. An example of a buy-and-hold strategy that would have worked quite well is the purchase of Apple stock. If an investor had bought 100 shares at its closing price of $18 per share in January 2008 and held on to the stock until January 2019, the stock climbed to $157 per share. That's a return of nearly 900% in just over 10 years. Critics argue that buy-and-hold investors may not sell at optimal times and miss out on timing the market, but investment success is also realized by loyalty, commitment to ownership, and the simple pursuit of standing pat or not moving from a chosen position. Here are 3 key takeaways. 1. Buy and hold is a long-term passive strategy where investors keep a relatively stable portfolio over time, regardless of short-term fluctuations. 2. Buy and hold investors tend to outperform active management, on average, over longer time horizons and after fees, and they can typically defer capital gains taxes. 3. Critics, however, argue that buy-and-hold investors may not sell at optimal times. Hope this would help. Thanks for watching.